When I look back at these 12 months, I can see clear progress across many areas. We won 2 mega deals this year. It's clearly a strong sign that our large deal engine is working and continues to expand. In fact, our clients have responded well to our consulting-led, AI-powered industry and cross-industry solutions. This is reflected in the strong growth in top accounts and also large deal bookings in financial year 25. We have continued to invest in our people, skilling them for the new AI wave. Our execution rigor with speed definitely has been acknowledged by our clients. And that's reflected in a clear improvement in our client satisfaction scores. And we have done all of this while strengthening our margins. It's a meaningful achievement in the context of such ongoing change. The global industry environment remained uncertain for most of the year. And of course, the recent tariff announcements have only added to that. Before coming to Bangalore, I've been speaking to clients across sectors and across markets to understand how things are playing out on the ground. Even though the underlying demand for the tech reinvention remains strong, our clients are approaching it more cautiously. They are focused on cost, speed, and of course, AI-led efficiency. And that's exactly where we are leaning in. And we see this as an opportunity to move with purpose, make smart bets, and stay committed to our 5 strategic priorities. I want to say this: driving consistent, profitable growth remains a clear priority for us, and we are focused on making that happen. With that, let's look at our Q4 and FY 2024-25 performance. All the growth numbers I share will be in constant currency. Our IT services revenue for Q4 was $2.6 billion, reflecting a sequential decline of 0.8% and 1.2% on a year-on-year basis. The order book for Q4 was at $4 billion, which is a growth of 13.4% sequentially and 10.5% on year-on-year basis. Our operating margins came in at 17.5%, which is flat sequentially and 110 basis point expansion on a year-on-year basis. And for the full year, IT services revenues were $10.51 billion, reflecting year-on-year degrowth of 2.3%. Our operating margin was at 17.1%, an expansion of almost 1% as compared to FY 24. Now let me talk about our strategic market unit performance. Americas 1 grew 0.2% sequentially and 6% on a year-on-year basis. Americas 2 degrew 1% sequentially and 1.8% on a year-on-year basis. Europe degrew 2.5% sequentially and 6.9% on a year-on-year basis. APMEA grew 1.0% sequentially and degrew 4.9% on a year-on-year basis. Now moving on to our industry sector performance. BFSI degrew 0.5% sequentially and grew 0.8% year-on-year. Healthcare degrew 3.1% sequentially and grew 0.1% year-on-year. Consumer degrew 1.3% sequentially and was flat year on year. Technology and communication degrew 0.9% sequentially and 1.1% year on year basis. Energy, manufacturing, and resources grew 1.1% sequentially and degrew 7% year on year. Finally, Capco continues to perform well, growing 6.5% sequentially and 11.5% on a year on year basis. Let me now provide an update on our strategic priorities. As I mentioned earlier, we are continuing to see strong momentum in large deals. In quarter four, we closed 17 large deals with a total value of 1.8 billion across our markets and sectors. In fact, for the full year, we closed 63 large deals for a total value of $5.4 billion, which is a year-on-year growth of 17.5%. Let me highlight two recent wins. One, a global technology leader has chosen Wipro for a major 5-year transformation program. In fact, we will deliver AI-powered end-to-end IT services, completely reshaping employee experience for almost 200,000 employees across countries. Our solution involves proactive support, intelligent self-service, and personalized digital interactions. In my second example, with our recent partnership with a leading global food distributor, we are taking over their entire IT infrastructure and corporate applications, which also includes HR, finance, and legal systems. We are leveraging AI solutions, and we will drive automation and simplify user interactions. This will result in higher efficiency, lower costs, and better user experience for our client. As we all know, AI has been part of deal conversations for a while, but this year, it has actually become central to almost every opportunity, big or small, helping drive productivity and efficiency. This reflects a broader shift we are seeing across the board. Let me now move on to large accounts, the second strategic priority. We continue to focus on our large accounts in our core markets and our priority sectors. In quarter four, our top 5 accounts and top 10 accounts grew 0.3% and 1.1% respectively on a sequential basis. I want to share an example that shows our momentum in these strategic accounts. In quarter four, a leading Indian private bank expanded strategic partnership with us as part of a business-focused digital transformation. We will provide AI-powered solutions to strengthen compliance management, addressing the critical need for regulatory compliance, while also enhancing the overall experience for this bank. This will help the bank boost operational efficiency and realize its growth ambitions across various functions.